Down about 500 on the day. A little bit of a cold here, so if I sound raspy, you know why. Let's look at the portfolio calculator. We phased in yesterday when it was down about 400 and down about another 500 today. So good time to phase in, good time to start on this drawdown. We phased into the third contract today at the very last trade of the day. So real trading was down about 535 on the day. I think hypothetical per contract was down about 450, so it would be about $1,500 drawdown out of about 2,700. If you go back to 2011, it's 3,700 back to here, but we're using the 2011 time frame, so 2,700 to 3,000 is our level, and we're about halfway there. And this drawdown curve has very regular drawdowns and regular snapbacks. Very strong January, February, upping to 3 contracts on Monday's trade for the 200K allocation and 1 contract on the 50K. And so we are right here. We will be right here at this 1,500 level. You see the 1,500 level, or 15,000 per E-mini, 1,500 per micro. So you're right in here looking for a bounce back move. And so that is the portfolio calculator. Let's look at the markets and the trades on the day in the stock index 25. Brand new portfolio we just started trading. So I thought it was strange how the market closed today, how the market traded this week. And if you remember, this low was last Thursday. The market seemed to discount Russia invading Ukraine until it actually happened last Wednesday night. Then it sold off this much, and then it's rallied last Thursday because the rule is once the invasion starts, then you rally, even though the market wasn't really down because of the invasion. The market discounted the invasion. I guess the consensus was that it wouldn't happen, or geopolitical concerns aren't a big deal, so we don't have to sell based on that, or it'll be very peaceful transition or not that violent. But it's turned into be a much more violent. The threat of a nuclear catastrophe was just last night. The market sold off. It revisited this level first time, which is 2 times this level, then 3 times, which is coming into Sunday night. Sunday night, the market flashed down here and bounced all week, taking out those highs. The highs of the week yesterday, coming down here, and it just looked propped up once again. I know I say this, I sound like a broken record when I say it's propped up. It just feels like a plunge protection team type of a prop up. And it's not pricing correctly. I think the market should be lower. The market should be lower because it was down here based on what is the Fed going to do. Commodity prices are at all-time highs. Inflation is I think it's just beginning, personally. And I think that inflation will be higher, interest rates will be higher, and this war is dragging on longer than the market thought. After it didn't even consider it in the first place. So I think the market should be lower. I think it's pricing incorrectly. But we'll see. We traded either way. Let's look at the trades on the day. I'll have the portfolio calculator updated over the weekend as well. Adaptive moving average was back and forth all day. Got short, a little bit of a gain. Got long, was up again on the day. Then it just chopped all afternoon. Choppy afternoon. It traded like a summer afternoon with not a care in the world. With just like I said, the threat of nuclear war last night, or nuclear catastrophe, with the threat of highest copper prices, wheat and corn prices, inflation, and higher interest rates, and the market's just, it's just sideways. Gap continuation in reverse, stopped out on the day. Night trader got 3 long trades on the day, got the reversal off this initial selling. The market creates lots of V reversals, more and more V reversals. We see that, and you can see that in some other charts as well. Just constantly looking to make a V reversal like they did during the pandemic, and off to the races type of a mindset. And I think we'll price lower though. EVP1 got long at the close, sold off. Market sold off. Gap continuation tried to short. It rallied, stopped out here. The 2022 version has a little bit bigger stop loss. It was also stopped out. Tick reversal, one of the highlights on the day. Nice short trade. Shorted these burst rallies. We needed a strategy that would do that, and we have that. Tick reversal got short, hit his profit target, got short again, hit his profit target, got short again, and the prop up took place from this point on. Europe closes, and time to prop the market up. It's a common pattern that is more common, more and more common, and it's almost too common at this point to say that it will continue. If you start trading a pattern that's this common, oftentimes that will be the very end of it. So it's one of those deals where you start getting tired of shorting the market and you say, well, I'm going to cover all shorts at 11:30, and then you miss some of the biggest sell-offs to come. And because I do think that after the market closes down 20%, the Nasdaq is down about 18% from its high. Once it settles down below 20%, that the sell-offs will be a little smoother, and there won't be so many bounces. We've yet to see an old-fashioned sell-off or a day where the market just sells off without bouncing more than it sells. Tick pullback, got in, tried to catch the reversal rally, but the market died out. Fake rally. Cobra 3 got short, market reversed. We needed a bigger stop loss on this one today. Cobra 2022 trades at night, hit its profit target on the short side. And those are the trades on the day on the micros. Once again, trade 3 contracts on Monday on this. If you're in the 200K, trade 1 contract, up to 1 contract if you're in the 50K. And that is my recommendation for this setup. So we're halfway. We're about 1,500 into about a 3,000 worst case drawdown on per micro, or 15,000 out of a 30,000 worst case drawdown on the E-mini. So that is the setup to trade, and we'll see what happens on Sunday night. Oftentimes, like I said, if you see a lot of propping up like this right here, it continues to revisit these levels but won't trade lower. Oftentimes it will gap down. So we'll see. It could go either way. This could be the end of the selling. Another way to think about it would be that after all that's happened, there's no more sellers. Maybe the sellers are done. There's no more sellers. You'd think that if there's a threat of a nuclear catastrophe, highest commodity prices in years, and raising interest rates, that the market should tank. And since it's just paused right here and closed quietly, it could be. You could also make the case it could be the catalyst for a big rally, that the sellers are done and there's nothing left but buyers. So should be interesting to see how the market opens on Sunday night. Looking forward to next week's trade. Those are the trades on the day from Friday, March the 4th, 2022. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.